Welcome to the Deep Dive. Today, we're taking a look at the FinTech revolution, but maybe from a different angle.
Yeah, we're focusing on a company that really proves just how hard it is to change an industry that is, well, famously resistant to change.
We're talking about N26, the digital bank out of Berlin.
Exactly. It's a fantastic case study of ambition crashing right into regulatory reality. We've gone through a lot of sources detailing their whole journey, their fight against the old guard of banking.
And our mission here isn't just to, tell a success story. We want to pull at the strategy behind it.
Yeah.
How did this startup actually manage to scale up to stay resilient?
And ultimately force these 100-year-old banks to completely change how they operate.
Right, all while being watched by some of the strictest financial regulators in the world.
And it all really comes down to this one core tension right from the very beginning. N26 didn't try to find a loophole. They went for the hardest path imaginable.
Which was?
Pursuing a full banking license under Germany's regulator BaFin. And that one decision basically shaped everything that followed.
Yeah.
Their speed, their risk, their entire advantage.
Okay, so that choice to build a fortress from day one, not a tent, that's where we need to start. So let's go back to 2013. The founders, Valentin Staff and Maximilian Tyenthal, they saw a system that was, for the modern user, just fundamentally broken.
It was completely archaic, and I think we can all remember it, right? If you wanted to open a bank account 10 years ago, you were physically going to a branch.
Just a paperwork.
Stacks of it, you're signing physical forms, providing redundant information. It was just so bureaucratic and slow.
And the costs were a nightmare, all these hidden fees. And if you, say, lived in Spain and wanted to send money to someone in Germany?
It would take days, several business days for a simple EU transfer. It just made no sense when everything else in our lives was becoming instant.
So they had this vision.
Yeah, a really radical one. Banking shouldn't feel like you're dealing with a government agency. It should feel like using WhatsApp.
Instant, simple, transparent.
Exactly. The goal wasn't just to make banking a little better. It was to strip out all that friction.
But, every startup says that, right? We're removing the friction. What made N26's strategy so different was that first foundational decision you mentioned.
The license.
Yeah, why the full BaFin license? Why not take the much, much easier route and become an e-money provider like so many of their early competitors did?
Well, this is the absolute key to their story. An e-money license lets you, hold customer money and process payments, but you are not a bank.
What's the real difference for a user?
You can't lend money. You don't have full control over capital reserves. And most importantly, you can't offer the European deposit guarantee.
Okay, so if I put, say, 50,000 euros into an e-money account and that company goes under,
your money might be gone. But with a full German banking license, your deposits are protected by law up to 100,000 euros.
Ah, so it's about trust.
It's all about trust, especially in a market like Germany, which is famously risk-averse. That license gave them a credibility that none of their competitors could touch. It was an investment in security, not just speed.
Which means they had to build all the serious heavy-duty systems, risk management, fraud detection right from the start.
Yeah.
Before they were even chasing users.
Yeah, it definitely slowed them down at first. But they were building the foundation before they tried to build the skyscraper.
Right, let's shift from that foundation to what the user actually sees. Because a fortress is no good if it's impossible to navigate.
Right.
So this brings us to their product philosophy, which was all about radical simplification.
The question driving the design was always, how can we make this as easy as texting a friend? And what they launched was, genuinely disruptive for Europe at the time.
I still remember the video verification. It felt like science fiction. I could open a fully functional bank account from my sofa in, 9 minutes?
Unheard of?
Yeah, while the big banks still wanted you to bring in a utility bill and 2 forms of ID.
And they obsessed over those little pain points, like the instant spending notification.
That was a huge...
Huge. No more waiting 3 days for a purchase to show up on your statement. Or the one-tap card freeze in the app. It seems so basic now, but it was a fundamental power shift to the user.
And they even used their physical product to communicate this, the transparent card.
Yes. The card was this perfect piece of symbolism. It was literally transparent. No hidden layers, no fine print you couldn't see. It just reinforced that promise of being totally different from the old, opaque banks.
So they have this powerful model in Germany. The next step is obviously expansion. How do you take that across 27 different countries with totally different habits and languages?
This is where that difficult choice to get the German license really paid off again. They used the EU's single market framework.
The passporting system.
The passporting system, exactly. Because they had that full German license, it acted like a passport, letting them offer their services across the entire EU without needing a new license in every single country.
That sounds almost too easy. Surely they couldn't just launch the exact same product everywhere. Europe is not one single market.
No, you're right, and they were smart about it. The core technology was the same, but the marketing and value proposition had to be localized.
How so?
Well, our sources show that in France, the big draw was the low fees and transparent pricing. But in Spain, customers were more interested in the travel-friendly features, no foreign transaction fees.
And in a market like Italy, with its really old-school bureaucratic banking,
N26 was a breath of fresh air for younger, tech-savvy customers. So they understood that pan-European doesn't mean one size fits all. It means having a unified platform that can be adapted to local needs.
Okay, so Act 1 is conquering the user experience and the regulatory hurdles. Act 2 is when success starts to attract a different kind of attention.
Yep, the challenges of hypergrowth.
This brings us to the regulatory gauntlet.
When you scale a software company, your limits are basically servers and engineers.
Yeah.
But when you scale a bank, your limits are capital, compliance, and, well, regulators.
And N26 got a lot of VC money, Tencent, Velar Ventures, and that just poured fuel on the fire.
It did, and it put immense strain on their operations, the back-end systems.
So what were the first cracks to appear?
It was mainly fraud and compliance. I mean, if you promise open an account in 8 minutes, that's an open door for bad actors.
Right.
Their systems for anti-money laundering, AML, and Know Your Customer, KYC, just couldn't keep up with the sheer volume of new users from all over Europe.
And that's when the regulator, BaFin, who gave them that precious license.
That's when BaFin stepped in. Hard.
What did they do?
They imposed some pretty serious controls. We're talking stricter onboarding rules, transaction limits for some accounts, and the big one. They put a cap on how many new customers N26 could sign up each month.
Wow. They basically hit the emergency brake on the growth engine.
It was a huge defining moment. It was the regulator saying, your operations haven't kept pace with your marketing. They had to fix the foundation, and they couldn't run from it.
How did they respond?
Critically, they didn't fight it. They poured a massive amount of money into beefing up their compliance and risk teams, building better systems. In a way, the regulatory pressure forced them to mature, making them stronger in the long run.
Speaking of challenges, we have to talk about the American dream, or the attempted American dream. In 2019, they launched in the U.S.
It seemed like a good idea on paper. The U.S. digital banking experience was, frankly, lagging behind Europe's.
So they saw an opportunity. But it didn't work out. Why?
They ran into a structural brick wall. The U.S. regulatory system is completely different. It's fragmented state by state. There's no passporting system.
So they couldn't just use their German license?
Not at all. They had to partner with an existing FDIC-insured American bank. And that meant N26 was just a tech layer on top of another bank's infrastructure. It completely limited what they could do.
And they were going up against homegrown players like Chime.
Exactly. And Chime had a much leaner model, deliberately avoiding a bank license. N26 found the partner model to be restrictive, expensive, and the cost to acquire each customer just went through the roof.
So in 2021, they pulled out.
Yeah, they framed it as a strategic recalibration, which I think is fair. They decided to refocus on Europe, where their core asset, that pan-European license, was a genuine competitive advantage.
And that retreat tells you a lot, doesn't it? That regulatory structure is more important than having a slick app.
It trumps product polish every time. They made the smart call to double down where they were strongest.
So let's look at what happened when they did refocus on Europe. This is where they really started to mature, moving beyond just a simple checking account.
Right. This is the shift from a cool app to a real financial institution. A great example is the introduction of spaces.
The sub-accounts.
Yeah, these little pots of money you could create for savings goals, for budgets. That feature resonated so strongly with European users because it gave them a level of control that traditional banks just never offered.
And they started adding other products too. Premium accounts, some insurance, trading features. This signals a big strategic pivot.
It's a pivot from growth at all costs to a profitability-driven model.
Right.
They started focusing on real revenue streams. Subscription fees from their premium accounts, interchange fees, and finally, starting to scale up the lending products that the full license enabled.
And they were also maturing on the tech side, behind the scenes.
A huge step. They started migrating their core banking systems in-house, moving away from third-party providers. That is a massive, expensive project.
What's the significance of that?
It gives you total control. over security, over performance, over the speed of future innovation. It's the ultimate sign that you've graduated from being a startup to being a mature financial institution that controls its own destiny.
So if we pull the lens back, what's the real lasting legacy of N26? It feels like it's more than just building a successful bank.
Oh, it is. They fundamentally reset market expectations for every single financial company in Europe.
How's that?
Well, when N26 made instant notifications and transparent fees the new standard, the big old incumbent banks had a choice: adapt or become irrelevant.
They forced their hand.
Completely. Major banks had to fast-track their own digital transformation plans. They had to simplify their pricing. N26 proved that what customers really wanted was speed and simplicity, not another marble branch.
They didn't just win customers, they set a whole new standard for the user experience. And they seem perfectly positioned for a future that's more mobile, more cashless, more pan-European.
Absolutely. The central lesson from their journey is that in banking, innovation has to be built on a foundation of discipline and, frankly, regulatory courage. Choosing that hard path, the licensed path, was the best long-term decision they could have made.
That really drives it home.
Okay.
But let's leave you with the final thought on all this. The success of N26 wasn't just about being better than Deutsche Bank. It was about competing with the user experience set by Spotify, by Uber.
They normalized making a high-friction industry feel effortless.
Right, they bridged that gap between heavy regulation and instant gratification.
Yeah.
So if that model worked for banking, what other major, slow-moving industry do you think is ripe for that same kind of radical WhatsApp-level simplification? And maybe more importantly, what's the one deeply entrenched regulation that would stop that from ever happening?
Something to think about.
Something to chew on until our next deep dive.